This is Matthew Cratter from Trader University, and today I want to talk about putting Bitcoin into your IRA, your IRA, talking about companies like iTrustCapital, BitIRA, as well as how to do this yourself, in addition to all of the questions and pros and cons surrounding it. I want to start by saying that none of this is investment advice or tax advice. Be sure to consult a professional investment advisor or tax advisor if you're going to do any of this, because it does get quite complicated. Now, an IRA, individual retirement account, this is just a tax-advantaged account that's used in the U.S. to save for retirement. And if you're in a different country, you probably have different retirement structures. But I think many of these same principles will apply. And so if you watch this whole video, you'll be in a position to evaluate whatever tax-advantaged retirement accounts you have in your country as well, and how those would work together with Bitcoin. I want to make one distinction here before we start that many of you probably already know, but in the US, a traditional IRA, and there are various forms of this, but the basic principle is a traditional IRA, you get a tax deduction up front, and then you pay taxes when you withdraw the money. The money can sit in that tax-advantaged account and compound without taxes until you reach retirement age. Roth IRA is different. You actually pay the taxes up front, and then you don't pay taxes when you withdraw the money. So the big issues are when it comes to Bitcoin and IRAs are fees, counterparty risk, insurance risk, and tax risk. I'm going to start by talking about iTrustCapital. I've been getting a lot of questions about this company, and you'll often see the companies I talk about being pushed by other YouTubers who have affiliate deals. I don't do any advertising like that, and so I'm able to offer a little bit more objective take on these. But you can do your own research, think about what I say, and come to your own conclusions. iTrustCapital, nice looking website. One problem I have with this is just the fees are very high, $30 a month. Doesn't sound like this is sort of an account maintenance fee, and it doesn't sound like a lot until you begin to think there are also trading fees. So you're going to pay 1% when you buy your Bitcoin, which is much higher than you would pay in most places. But if you think about just the account maintenance fees, these really will grind down your account unless you have a significant amount of money in there. But it's always important to consider the fees. About $30 a month for 12 months. Let's say you keep this account for about 25 years to retirement. That's almost $9,000 in really unnecessary fees. Or you can decide for yourself how necessary they are. This calculation doesn't take into account the monthly fee increasing over time. And if you just think about it, I'm going to do a really simple calculation here. If you instead paid all the fees up front, the opportunity cost would really be the returns that you could have gotten from Bitcoin. So if you think Bitcoin's going to go up 10x in the next few years, you're basically paying about $90,000 in fees. If you think Bitcoin is going to go up 100x or more, as I do, then you'd be paying close to $900,000 in fees. Again, this is a simplification because these fees would actually be paid over time, monthly, so you have to do some time value of money calculation. But either way, a lot of unnecessary fees. Another problem, and a really big problem, is the insurance coverage for a company like iTrustCapital. And as far as I can tell, all companies have the same problem as we're going to talk about. So if you go in and look at their insurance page, how they insure your cryptocurrency IRA or IRA, it looks like they've got a lot of insurance. This is great. Coinbase custody, $320 million. That's certainly a lot of money. And then they have a separate insurance policy with Curve for $50 million. Now, when you dig down and look at this, you begin to realize that this insurance coverage is not sufficient. And they actually brag about it on their website, saying that they're now managing more than $1 billion on the platform. You can do the math. You've got $370 million in insurance, $1 billion in assets. So really only 37% roughly are protected in case of a hack. There's always insurance loopholes too that you have to look for. Now, this is a problem for many companies because when you look at what Coinbase so we have Coinbase, which is the company and the app where you can trade cryptocurrencies or Bitcoin, buy and sell it, and then you have their custody business, which is a separate business, and that's where they actually hold and secure their cryptocurrencies, especially Bitcoin. Now, the problem with that is that, as far as I can tell from their website here, I'm here at Coinbase Custody. And again, we're talking about this not just because iTrustCapital uses them for insurance, but many companies do. And if you still hold your Bitcoin if you're leaving it on Coinbase or Coinbase Pro, this is what you're exposing yourself to. Basically, they have a 320 million limit per incident and overall with Coinbase Global as the named insured. So if you're holding your Bitcoin on Coinbase, you're really sharing. I believe this is the same. This is the same insurance policy, and it's not just for all the iTrustCapital customers. And there's $1 billion there, so it's not enough coverage for them. But this is actually coverage for all of Coinbase custody, which is just, it's unbelievable that they would have such a low number. Again, this is from their website. Maybe it's not true, but I'm taking it from their website. So 320 million overall insurance coverage. The platform, as of the end of last year, had over $90 billion in assets. You can do the math, 320 million in insurance for 90 billion in assets. Again, if you're storing your Bitcoin on Coinbase, you're crazy, totally crazy to do that. And then if you look at their year-end review, they say that of that 90 billion that they have on the platform, 50% of it, so 45 billion, is being held at Coinbase custody. So that's $45 billion worth of assets, and they only have $320 million worth of insurance. This will end very badly. I'm not sure if it'll happen this year or in 10 years from now. But if there's ever the problem with Coinbase custody, it's this huge honeypot for thieves. They don't have sufficient insurance, and so you'd be out of luck. Your recovery rates would be just tiny. They'd be less than 1% if something were to happen and significant assets were to be lost on Coinbase custody. And it gets even worse because if you look at another part of their website, they now say that they have 223 billion assets on the platform and $320 million worth of insurance. So it's insanity. And you have exposure to this, whether you hold your assets at Coinbase or you hold your assets at a place like iTrustCapital. Now we'll move on to a company that I think is even a little more shady. This is BitIRA, BitIRA.com. And the biggest red flag, or there are a bunch of red flags, but when you go to their website, first of all, they won't even tell you what the fees are to hold an account there. I've talked with people who've spoken with them, and they said the fees are quite high. They're 2% or more per year. Again, they have different fees for different accounts. This is always a bad sign, especially in the digital age, in the age of the internet, when a company doesn't even tell you what their fees are. You have to contact them, and they're going to put you through some marketing and a special funnel. And you can tell just looking at their website that this is really a company that's geared toward the 50 and over crowd, which I'm part of. But I would say it's really geared toward fairly naive investors. There's a lot of marketing language on the website. They talk about how your funds are locked down in grade 5 nuclear bunkers and monitored and guarded 24/7 by specialist staff. This is absurd when you think about it. We're not guarding gold bars here, and these nuclear bunkers, yes, they'll protect something from a nuclear bomb if it happens to hit it, but the real problem here is the specialist staff. You have this counterparty risk where who's guarding the nuclear bunkers and then who's monitoring them, and it's sort of infinite regression. On their website, they talk about that they have insurance of $100 million worth of insurance. They don't tell you who it's with. It's probably with the Lloyd's of London group. It looks like they're talking about London insurance companies. Again, a lot of counterparty risk here. And then what's very strange is that if you look at their press releases, they just said that in this year, as of February 16th, they now have dollar for dollar insurance. So if they have $200 million worth of assets under management, they have $200 million worth of insurance. You still have the same counterparty risk, but they haven't updated their website to clarify this. And so the more you read their website, the more I would worry. This seems to be a very high fee, mostly marketing company. Even if they do have dollar for dollar insurance, then what you are dependent on is you're dependent on the solvency of those insurance companies. And if you dig down, I think I've done this in another video, you'll find that there are many companies that are using the same insurance policies, and there's really not enough for a payout for everyone. And again, you can do all the research you want on this. You don't really know. They don't even provide, BitIRA doesn't even provide the fine print on their insurance policy. They won't even tell you who they're insuring it with. So in that way, iTrustCapital is a little bit more upfront. But this is just too shady, and the fact they're talking about nuclear bunkers is really a distraction, because that's you don't have to worry about nuclear bombs bombing your Bitcoin account. So that's the insurance question. We've covered the problem with fees. You have to ask yourself, when you go to one of these companies, is the insurance coverage sufficient? Even if it is sufficient for the assets under management, who else shares in that limited pool of payouts? And then again, these companies will probably not even let you see their insurance policy with the parent insurer, and so there can be loopholes, there can be reinsurance risk, etc. And so you really have to trust. You have to trust these companies, and you have to trust whoever their custodians are, where the cold storage is for the Bitcoin, and you also have to trust the insurance and the solvency of those insurance companies if they get hit by a bunch of things at the same time. Maybe there's a Bitcoin hack and an earthquake in California and a hurricane in Florida, and they have exposure to all of this, and you end up not having enough coverage. Bitcoin, you're meant to hold your own private keys. This is one of the fundamental principles of it, that you don't have to trust anyone. You don't have to have counterparty risk. Normally, you buy your Bitcoin, you put it on a hardware wallet, and your hardware wallet controls the private keys. I made a video about that over a year ago, which I will link to below, and you can check that out. I think this is an important distinction. I sometimes call it paper Bitcoin or a Bitcoin IOU. This is when someone else holds your private keys. So if you have a hardware wallet, you are holding your own private keys. You don't share them with anyone. You actually control the Bitcoin and you can move it. But if you own paper Bitcoin or Bitcoin IOU, you can't move it or withdraw it without someone else's permission. So if you have it on BlockFi, for example, they'll make you wait 24 hours to move it. At least they did when I was experimenting with it, etc. If you buy Bitcoin on Robinhood, you don't control your private keys, and who knows if they have enough Bitcoin to back their Bitcoin paper that they're selling. So if you're not holding your own private keys, you're really trusting someone else with them. Or you may be buying paper Bitcoin and there's nothing backing that Bitcoin. Now the whole point, as I said, of Satoshi's invention is to get away from having to trust someone else. And the mantra you really need to keep in mind when analyzing these companies is not your keys, not your coins. And so that's the additional problem here. Even if you trust iTrustCapital, and I don't trust iTrustCapital, you're trusting them to hold your keys. And it just seems unnecessary to me. Now we're finally going to talk about the tax implications. That's really the only reason to use an IRA, but they're a little bit troubling as well. Traditional IRA, which is that first form of IRA that we talked about, they have what are called RMDs, required minimum distributions. Used to be the age of 70 and a half, now it's 72. When you turn 72 and you have one of these accounts, and again, I hope I'm getting this right. These data points are always changing, so consult a tax person. But my understanding is that you have to start taking distributions when you reach the age of 72. It looks like this rule is actually waived. I'm not sure if it's waived for everyone at all net worth levels, waived for 3 years under the 2020 CARES Act. So again, you got to look into this. But normally, even if it has been waived for 3 years, you will be forced at a certain age to take these withdrawals. Those withdrawals will be included in your taxable income. And so the problem with the traditional IRA is it forces you to sell your Bitcoin and pay taxes on it at the end of your life, whether you want to or not. There's similar problems with a Roth. Roth doesn't have RMDs or required minimum distributions during your lifetime, but then your beneficiaries may need to take RMDs, required minimum distributions. And this is where it becomes complicated. Personally, I don't like the idea of sticking my Bitcoin in a legal structure that forces me or my descendants to take withdrawals, to sell it at a certain point, or to pay taxes on it. If you put something in a legal structure, you're depending on the legal system. You're also forced to go along with any updates to it. So if the rules are changed with IRAs, you'd be forced to comply with that. I'm really thinking about my Bitcoin holdings as holdings for the next 10 generations in my family. And this is how Bitcoiners need to think. You need to think of the very, very long term. We are low time preference people. We're not interested in the crypto casino, and we're not interested in get rich quick. The real efficiency here is holding Bitcoin for the long term and planning ahead for your children and grandchildren. If you owned a Picasso, if you owned a beach house in Hawaii, you would never want to take profits on that. You would try to figure out a way to keep it in your family forever. Now, right now, under U.S. tax law, we have something called the stepped up basis or stepped up cost basis at death. And the way this works, and it would apply to Bitcoin, I presume, again, consult a tax advisor. If you buy, during your lifetime, you buy stock that's worth about $100,000 when you buy it, and then it goes up 10x, and on the day of your death, it's worth $1 million. That value on the day of your death becomes the new cost basis. So it basically gets stepped up. And what this means is that your heirs could sell the stock that day or subsequently and not pay any taxes on your capital gains. So the original cost basis would be the value of $100,000, and the new cost basis is $1 million. So they don't only have to pay taxes on capital gains above that. Theoretically, they could hold the stock and pass it on to their children, and there'd be no taxes owed. This is one way that the rich continue to get richer. Now, Biden is talking about possibly eliminating the stepped up cost basis. This would be disastrous for not just for billionaires, and probably wouldn't be too disastrous for them because they can afford very complicated offshore legal and tax structures. It'd be very bad for family farms, for example, where people would have to literally sell the farm that's been in their family for generations in order to pay the estate taxes or any other taxes that are due to stepped up cost basis. So if something like this happens, with relation to Bitcoin, all I would say is let's hope there are not any boating accidents. This is, of course, the joke with Bitcoin. I lost my Bitcoin in a boating accident. If you're holding it within a legal structure, the government sort of knows where you're holding it. If you're holding it on a hardware wallet where you control the keys, and unfortunately Bitcoin gets lost, which would be a tragedy, you may not owe taxes on it. I'm definitely not suggesting trying to avoid taxes or doing anything illegal, but I think the ideal for Bitcoiners would be to out-hodl the U.S. government or wherever you live, where you basically hold on to your Bitcoins for so long that it becomes a currency and you don't have to pay taxes on it, or the U.S. The IRS or other taxing authorities just go away and you don't owe any taxes on it. The other way to actually be able to use the value that accrues in your Bitcoin is through Bitcoin loans. You can borrow against your Bitcoin and buy various things with it, like real estate or other items that hopefully will hold their value. And you don't have to pay any taxes, is my understanding. I go into this in some depth in this video on Bitcoin loans. I don't think it's the time to do this yet, but when Bitcoin hits 1 or 2 million, I think this becomes very, very interesting as well. Finally, if none of this has dissuaded you from putting Bitcoin in an IRA, there is a pretty fancy way of doing it. I've not done it myself, but I have referred you all to this video at various points in time. This is a video by Vulcan Trader talking about how to set up a structure that allows you to hold your own private keys and hold Bitcoin in an IRA. So in this way, it's a very clever strategy. I believe it still works, so I haven't done it myself. It's a very clever strategy because you avoid the insurance risk, the counterparty risk. You get to hold your own private keys. I'm not sure what the fees are, but I think they're fairly low. And so you avoid everything except the problems with required minimum distributions for a traditional IRA in your lifetime or for a Roth IRA in your descendants' lifetime. So if you really are set on shielding your Bitcoin from taxes, and again, my preferred way of shielding Bitcoin from taxes is you basically never sell it. If you don't sell it, you don't own taxes on it under current U.S. law. If the U.S. law becomes too stringent and really becomes a way of stealing much more private property than the government has a right to, I would expect widespread civil disobedience, and I would expect many boating accidents in which Bitcoin mysteriously disappears and is unable to be taxed. So let the government beware as well. You can only extract a pound of flesh from each of your citizens so many times before they rebel. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Again, don't do anything illegal. Make sure you pay your taxes. and make sure you respect your government. Thanks a lot for watching, and I'll see you in the next video.